So, shares of fast growing, innovative companies have plunged since early November, and Tesla hasn't been spared either. Well, we can't really pinpoint why, but the popular touted reasons are that investors are shedding growth stocks in favor of cyclicals in anticipation of Fed interest rate increases. If we factor in the fear of a military confrontation with Russia, we have the conditions needed for a selling panic. Now, what's the impact of all this? Should there be a cause for concern among investors? Stay tuned as we figure it out. There have been worse market conditions in the past, notably the dot-com crash and the 2008 financial crisis. There's a chance that these fears are overblown. That's because the shares of companies that have been plunging are profitable, fast-growing companies that are not in imminent danger of filing for bankruptcy. For instance, take a look at Tesla. The company has one of the highest market capitalizations in the industry, and it's currently celebrating some great fourth quarter and generally 2021 results. The delivery numbers were outstanding, and the company also posted quite an impressive 2021 earnings report. There's absolutely no danger lurking that would make Tesla bankrupt. Rather than a reason to liquidate your holdings, the recent correction might as well just be a buying opportunity. Tesla has lost a substantial percentage of its value since early November when CEO Elon Musk began dumping his shares to pay taxes on Tesla stock options that he chose to exercise rather than letting them expire in August 2022. But with the company reporting record profit and shipment growth, Tesla stock is likely to regain its lost ground and move higher as Musk satisfies the financial conditions needed to earn even more Tesla stock options. Musk, who receives no base salary or cash bonus from Tesla, gets stock options if Tesla meets specific financial targets. That's due to the terms of a 2018 compensation package that awards him 101 million split-adjusted shares in 12 equal tranches as the company hits those benchmarks. Having met the market value benchmarks and 7 of the financial targets, he's already received 59 million options from that package. Analysts expect him to receive the remaining 42 million options when Tesla hits the other 5 remaining financial targets. Once Tesla reports its 2022 results, analysts expect him to receive 4 option tranches in 2022 and 1 in early 2023. Dan Ives, the Wedbush tech analyst, estimates the 5 tranches would be worth $36.3 billion were Tesla's stock to trade at January 24th's price of $930 a share. That would mean that in 2027, Elon Musk has to begin selling Tesla shares to pay the tax bill when those options are poised to expire unless he exercises them. As long as Musk stays motivated, Tesla will certainly stay at the top of its game. Tesla stock is likely to enjoy a generally upward cast with inevitable ups and downs as long as Tesla keeps exceeding those aggressive growth targets. And that's not the only positive catalyst. More growth is on the way in 2022. After delivering over 936,000 vehicles in 2021, analysts expect Tesla to deliver some 1.5 million vehicles to customers in 2022, which is 60% and higher than its 50% annual average growth rate in deliveries in the coming years. For the past many years, Elon Musk has been working on the Starlink project with the intention of providing internet to the remotest spaces on the Earth by a network of private satellites in orbit. It picked up pace in 2021, and Starlink now has more than 2,000 satellites to boost. This project can start to pay off in 2022 and can increase the profit margins considerably, which will provide a positive outlook for Tesla's forecast. This is a project that could eventually be adopted and incorporated by many nations in a bid to improve internet connectivity. If it picks up pace this year, then Tesla's figures could increase significantly, and that's an opportunity you don't want to miss out on. But then Elon Musk announced during the earnings call that the chip shortage will still pose a problem to the company in terms of production. The question is, will that hold back Tesla? Well, there's no doubt in the fact that Tesla has handled the chip shortage more efficiently than its rivals, giving them excellent results for 2021, and as analysts report, this issue will subside in 2022, giving Tesla yet another cushion to go aggressive in its production and deliveries, and we can witness the upgradation of guidance in every quarter's result and a positive Tesla forecast. And whether anybody likes it or not, China is a big market for Tesla and EV in general, And according to the estimates, China will represent 40% of deliveries for EV makers in 2022, contributing nearly $400 in its share price. If China's market is handled properly, it could be a big tailwind for Tesla. Coupled with gigafactories in Austin and Berlin, there should be a massive increase in 2022. The opening of the new gigafactories in Berlin and Austin in 2022 can provide a big boost to production. It'll increase the global presence of Tesla and increase its capacity to produce 2 million units annually from roughly 1 million units currently. Many analysts are bullish for Tesla for the year 2022 for a start. For instance, Goldman Sachs analysts issued bullish commentary for the stock, calling it the undisputed leader of the EV pack and has given a target of $1,200 while maintaining a buy rating. Wedbush Securities' Daniel Ives is also bullish with a target price of $1,400 and the best bull case of $1,800. Wedbush has given outperforming rating for the stock and said that there's still market share left to be consumed by EV, and Tesla smartly managed a chip shortage in 2021. For Tesla, there are various positive and negative factors, and the stock journey for 2022 will be resultant of how they pan out throughout the year. Elon Musk definitely will have to put a brake over share selling, think more proactively towards launching Cybertruck, but if China's plan works out in favor of Tesla, there's no one stopping it from touching all-time highs in 2022. Musk also said the firm's new Optimus robot is arguably Tesla's most important product in development, given that it has the potential to be more significant than the vehicle business. And this is something investors need to start paying attention to. We already established that Tesla is much more than just a mere EV company. Investors will focus closely on Tesla's vehicle deliveries. The company's primary business is making electric cars, and it needs to continue expanding production in order to grow revenue and profits. However, the company has faced enormous challenges over the past year relegated to global supply chain disruptions. Not only has Tesla had to adjust to the global shortage of semiconductors, but its customers have had to deal with longer waits for their vehicles due to shipping bottlenecks. Tesla has had to readjust its promised delivery dates at various points in the year. The company also continues to face rising competition from other producers of EVs, such as Volkswagen and General Motors. But none of these really pose any serious threat to Tesla. The company's strong vehicle deliveries in each of the 4 quarters of the 2021 financial year enabled Tesla to boost total annual deliveries by 87.4%. Now, that surpassed Tesla's goal of 50% growth for the year and also represented an acceleration of growth compared to the previous 2 years. So basically, Tesla has been on an upward trajectory in terms of growth, which in fact is way ahead of its peers in the EV industry. Elon Musk has a very specific vision for the ideal factory, which is densely packed, vertically integrated, and unusually massive. During Tesla's early days of mass production, he was chided for what was perceived as hubris. Now, Tesla's original California factory has achieved a brag-worthy title of the most productive auto plant in North America. Tesla is just on top of its game, and 2022 is set to be another successful journey. We'll keep you posted on any fresh updates. Remember to like, share, and subscribe. See you next time.